Hey, how's everybody doing? Alexander Investment Insights, and we're back with another video. Today I'm just going to go over the S&P 500 and its history, just the basics of it, and I'm going to try to explain to you guys why the S&P 500 is like a good investment if you want to invest in the United States equities, securities, companies, just market. And I'm going to explain it to you through history and also try to throw in some more facts and that at the end. So first I'm just going to go through the historical chart. So this is the S&P 500 historical chart. Right now it's currently sitting at $5,460, but it started out in 1928 at $318, and when it first came out in 1928, it rose quickly to $547, but then as World War II happened, it went all the way down to $100. As you see right here, this would have been a perfect time for those people that were here at home during World War II or had loved ones overseas to invest in the stock market. Because what happened right after that? The United States won the war and the stock market recovered. It recovered and it came back down and it stalled out. Really, there was rebuilding going on. But what's important is that when people feared, the people that got rich were the people that bought the fear. They bought the fear and the stock market went up throughout the 40s, the 50s, into the 60s. Into the 60s and the early 70s we made highs. The stock market was now at $1,000, right? $1,000. 2 times the amount of what it was in 1929. And then through the 70s and the war with the Vietnam War, we came down because there was a lot of consciousness in the air going around anti-government, things like that. But then what happened? That faded off. The 80s came. The 80s came and consumerism came and mass consumerism and producers were able to margin more. And then in the early 90s, late 80s, price really started to boom from $1,000, which it had a high in 1994, which also was a high in 1969. From 1994, it popped $1,000 all the way to $2,000 in 2000. In 2000, the 2001 crash crashed it, recovered. The 2008 crash crashed it, recovered. Now it's 2008 to 2024. It's recovered all the way past from $1,300 after the crashes from 2001 to 2008. Recovered from $1,000 all the way up to now a staggering $5,000. A good history on what the S&P 500, the United States equities markets, the top 500 companies has done over time, and how in times of unsettledness it drops, but if you buy the fear, it recovers in the end of it. So that's a good historical chart. We could go to by year chart. So these red candles are the years that S&P 500 declined from the January 1st to December 31st. And it starts in 1929, down 12%, 1930, down 28%, 1931, down 47%, the middle of World War II. Let's skip over here. We had some after World War II. In 1942 we had growth, up 12%, up 19%, up 13%, up 30%, up 10%, staggering growth, big growth, up 45% in 1953. And then the upside, the green, really kept going. See how a lot of these green candles are a lot higher and a lot more constant than these red candles. These red candles are only few. And in times of economic despair, like in 2001, economic crash. 2008, economic crash, down 38% year over year. But what happened? It recovered, up 23%, up 17%, up 0%, up 13%, up 29%, 30%, up 18%, stalled 8%, up 10%, and it just recovers. So buying the fear, buying down here, you have to realize if we are down here, this is where you want to buy, right? Because it always recovers if you're bullish on the United States, right? So let's go to president. So I have the last 5 presidents here now. We'll start with Bill Clinton. Bill Clinton is this line right here. He actually had the best economy, going up a total of a high of 245%. We go to George Bush after him, the worst economy, ending at negative 40% at the end of 8 years. We go to Barack Obama. Obama ending at plus 175% at the end of 8 years. We go to Donald Trump, ending at plus 63% at the end of 4 years. And Joe Biden at 3.5 years, up 49%. So right now, the only president in the last 5 years to have a losing stock market is George W. Bush on the S&P 500. So, and that's pretty interesting when you look at these numbers. And we'll go by recession. The 2008 recession right here, down 37%. The 2001 recession, down to 10%. The 2020 recession, down to 12%. Recovered pretty quickly for how much people were panicking, actually. We'll go to the 1973 recession, down 33%. And we'll go to the 1937 recession, down all the way 50% in World War II. So that is a good look at some historical data from S&P 500 start to now. And if we scroll down here, we could go from the start to now, the annual percentage change year over year, the green being plus and the red being minus, from 1928 going up. You see from 1928 there was some red, but as we kept going, looks like there's beginning to be a bit more green, but really what matters is the numbers and how much the sum is when you add it all up, which is positive, obviously. And if you want a better candlestick vision on the S&P 500 growth, we could go here to the SPY ETF. So here, this is the monthly chart. This only goes back to 1993, but the 2001 recession here at 152 on it, down to 77, recovered back to 150, down to 77, and the 2008 recession, and then since then recovered. And then we go here, the 2020 recession, down here from 337 to 219, and then going up. And then during Joe Biden's time, this was during inflation and some of stagflation, from 480 to 353, and then since then recovering to the upside. So some of these down recessions last longer than others, right? But there is always pullback, is what you have to understand. If you like this video, subscribe, leave a like, comment for more, and we'll see you in the next one. Bye.